Let me welcome you to this afternoon's webinar. My name is Steve Orr. I'm the managing partner at Orr Group, and I'm joined by my illustrious portions of the senior management team at Orr Group, as you can see, and I will be introducing those folks in just a minute. This is a difficult moment for all of us, for sure, so we thought this was the appropriate time now that, we're sort of a couple weeks into, let's call it the crisis, and maybe with a window of seeing the end of it. I don't know if it's 2 weeks or 3 months down the line, but it will end, and things will hopefully get back to normal. But what we want to do is try to frame first the context of, what does it look like right now? How does it impact our industry, the nonprofit space? And what are you all thinking about? We're trying to imagine what you're all thinking about and anticipate that with some preemptive questions and answers. But then we also want to hear from you. So there is a Q&A component to Zoom. Hopefully you're familiar with it. Please use that. We'll be looking at your questions. You can submit those through the course of this 1 hour presentation or at the, towards the end. So the format we'll use is I'll introduce each of these folks from our team. And then I've picked a topic that we want to discuss and as maybe 5 minutes or so with each person. And then we'll open it up to, as I say, more sort of Q&A if we can pull questions from the audience. We already have a few, so that should go well. So let me just try to summarize where I think what's happened here. We're all watching the media. We're all experiencing it firsthand. I assume we're all bunkered down in our homes and hopefully with family and with people that we love, because this is a difficult moment for sure. But we learn a lot of things through this too. So we have been hit with a international global pandemic, obviously, and that's something we can't control. And then the outcome has been a very significant economic halt, pretty much unprecedented ever, I think. So of course we first worry about our own health, and that's where we should be. We should protect ourselves, as I hope everyone is, and we need to worry about our families and our colleagues. And that's very challenging because it's a whole new environment for us to deal in. And then, at the same time, we're trying to be productive and get things done. So we're all in the same boat. We keep talking about that. It's a collective experience, and we have to learn through it and adapt to it and use the tools that we have. And happily, we have things like all the things that technology bring us to help us through this challenge. So, given that it's a two-pronged issue, as a firm, we have no expertise in COVID-19, so we're not going to be doing too much commentary, providing too much commentary or help on that. You get lots of it, in the media. We all know that we're trying to flatten the curve. As to the economic portion of it, though, and the impact that has on our donor base and on our businesses, we think we have a few things to say, and that's where we're going to try to focus. If we go back to the two previous crises that most of us have been through firsthand, and in the workplace, it was 9/11 and 2008. And the one thing we saw happen in both those occasions is that in fairly short order, philanthropy, came back. It halted, as it presumably is now, not halted, but I mean, it slowed way down. People are cautious. They're worried about a number of things. Each one of these crises brings different concerns, of course, but on the economic front, you see things like the stock market and all the indicators, kind of go haywire for a while. And that influences the way donors think. There's no question about it. But in both of those cases of 9/11 and 2008, we came out. It wasn't instantaneous. In 2008, we had some sort of systemic issues in the system that had to be corrected. So that meant it took months rather than days or weeks. But it will come back. And that's, I think, part of the message I want to send today is I'm pretty optimistic that this is going to turn around in some time frame. I'm not predicting when, but I think it could be faster than we think. And I think part of our message is that we think we should be taking action now. So again, we just wanted to bring together friends and colleagues and partners and such today to talk about these very important issues and the challenges that are in front of us. So I've told you about the format, so why don't we just dig right in. I'm going to start with CJ, but let me just say a couple of things first. We're going to focus initially on, the economic situation and the, impact we think that has on us, in the nonprofit space. And I know this might be really boring for many, but at the same time, it's really important. So I'm going to say it anyway. I come from a finance background, as does CJ, and I really watch very carefully what happens on the monetary and the fiscal fronts. And I know it's just been so dynamic in the last 2 weeks. We've never seen anything like it. But on the monetary policy front, this is where the Federal Reserve is involved, pumping money into the system, trying to correct dislocations. Very, very important stuff, because if we can keep the system moving, if they can keep the system moving, it will have a much better chance of turning around, more quickly without it becoming, a hopeless long-term problem. And the Fed certainly has been doing dramatic things. So I think we'd have to say, in summary, on the monetary policy, that we've been through this before. The actions taken thus far have been very, very effective. And I think it's generally pretty good news. On the fiscal front, shockingly and happily, this country came together, with a bipartisan way last week. And you saw an amazing bill being passed. Who knows? Only the test of time will determine how well it will work. But I think as we look into it, I think it has a good shot of working in terms of its intentions. And we're going to focus on that in part of this dialogue, because it's so critical and has such a huge impact on how it might help us directly. We're all trying to help people through our missions, but we can't function unless we are, raising dollars and employing staff and providing, the way to the solution and the mission. So these are really vitally important things. So now I want to bring CJ into the dialogue. CJ is my son. Very proud of him being at the company. He's been here almost 7 years. Up until December of 2019, he acted as our Chief Operating Officer. He's now a Vice President as of the beginning of the year, and is managing several of our larger partnerships. He also plays a critical role in the strategy of the firm as a member of the executive committee team. And he was previously a trader at Alliance Bernstein. He wanted me to note to give him some bona fides there. So CJ, let's start with, just quick update from your point of view as to where you think we are, sort of economically right now with markets and such.
Yep. Thank you. And thank you for the introduction. I know these are incredibly difficult times, and really appreciate everyone coming together as a community to talk about this. I asked Steve selfishly to mention about me being a trader, just because I was on the trading floor in 08 and 09 and sitting in the trenches watching this happen. And what we're seeing here again is something even worse and more volatile, and a little bit scarier. But what has happened over the past few weeks is that, at least in my humble opinion, and I'm not a financial advisor or anything like that, but that the worst in terms of trading volatility, the agita, the ups and downs, the uncertainty has at least passed a little bit. I mean, let's talk about uncertainty. We've found out over the weekend, Dr. Fauci said we can expect 100 to 200,000 deaths from this virus. And that is our government coming out and saying that. So that's been big. At least we know what we're up against. And now we can think about, okay, if that's going to happen, how long is this really going to last? And, that's a big gulp to digest. And the market has taken that news, and the fact that our Fed has said we're going to be up at 30% unemployment, that we've already acknowledged that. We're going to have, 3.3 million in unemployment weekly jobless claims, and the market has digested that. So everything, at least in the market, has learned and has reacted already to what was happened. And that's why you're seeing the VIX, which is the volatility index, starting to go down. The VIX was highest about a week or so ago on Wednesday, actually, when Bill Ackman got on CNBC and talked about all this craziness about how Hilton was going down to zero. That was actually probably our worst day. And ever since then, since the government has stepped in, since the government put together the fiscal plan, the stimulus plan, and also just been more transparent with the American people about the death rate and where we are with cases and all that stuff. The market has definitely calmed down a little bit. So the good news is I think the craziness is a little bit over. I don't think we can anticipate it going shooting straight up or shooting straight back down. I bet it would probably be choppy along those lines over the next few weeks to months. But Ben Bernanke, our previous Fed chair and economist, top-known economist, went on CNBC yesterday and said he expects after this clears in a few months to anticipate a quick rally, which was really good to hear from one of our top economists talking about that. So how this kind of relates to donors, though, is that any of your major donors who are either involved in the stock market or work in a financial firm are a little less on edge. They're definitely still on edge, but less than they were a week or a week before that. And it's a good opportunity to at least talk to them and have those conversations because they're a little bit calmer. That's just what I'm thinking, a little bit of update on the markets, but anything else you think I should add, Steve?
Yeah, why don't you, if you could, talk about what you think board members are thinking. What kind of policy changes do you think this is going to lead to in the short term? And then, how would you view it, say 2 months, 3 months from now?
Yeah. Well, I'm talking with a lot of board members and trying to have conversations about bringing their pledges in and all that. I've gotten a lot of already, give me a few months. Let's wait to see what the market does before I commit to that, or just let me see where things settle before I commit to your pledge. So I'm seeing a lot of that from board members who will be straightforward with you and have conversations about why they're delaying. I also am seeing boards definitely wanting to know what your organization is doing about COVID. Special meetings, development committee meetings, board meetings, special board meetings on COVID. They are asking for consistent communication and a immediate response from our organizations to be acknowledged of what's happening and to adjust accordingly. So a lot of times that's adjusting either budgets, expectations on what we think that will be pledged or renewed or anything like that. But also just how we're going to react as an organization to what's happening. They're testing and asking the executive directors to present to them what the organization will be doing to react to this COVID.
And one thing, I'm getting questions, and I'm not going to answer all of them, but one of the things I can see as a concern is, we have immediate budgetary decision-making at a board level. What's your advice? And it's difficult to give advice, of course, in this environment for all the obvious reasons. However, I think it's too soon to radically, do anything radical, i.e. cut, the expectation that, to accept the expectation that donors are going to be giving a lot less, for the rest of the year, and the budget should be cut, and so forth and so on. I think it's very possible that, we switch back fairly quickly. And I know that donors are very sensitive to what's going on right now. And if they're involved in your organization, surely the board members, this might be a moment, to really step up and do more than they would ever have thought of doing. But it's going to take time, without question, on that issue. So CJ, final question for you on this topic. In light of all of this, what should our nonprofit executive leaders be doing right now in terms of management of their organizations?
By far, it's communication and being transparent with not only your donors, stakeholders, your board, internally. Communication is key, especially as you're going to have to make really difficult decisions on your budgets and talking with board members on either hiring or firing that you will have to be doing. The more communicative that you can be throughout this moment, the better off you'll be.
I think that's right. So now the second general topic we want to touch on, which is vitally important and goes to that same issue, is this stimulus package. Again, I mentioned in my initial remarks how incredibly swift the action was. And actually, I think as we dissect the package, it's actually structured in a way that goes straight to probably those who need it most, and that will have the greatest impact in terms of protecting all of our payrolls if we're of a size as an organization under 500 employees, with significant loan packages that in part or all are turned into grants. So we're in the early days of all this, and we don't know, as you don't know, all the answers on all the questions, but a lot of materials being put out, which is very productive. And in our company, at Orr Group, I have asked Kelly Dunphy to be our specialist in this area. The bill only started to become clear last Thursday or so. So, all the information is just a few business days into it. But so let me introduce Kelly. Kelly's been with our firm for over a decade. She heads our strategy area, which includes, strategic planning and development planning and really anything along the strategic lines. She also, in the last 2 years, has helped us develop a very complex and sophisticated planned giving approach, which has been fantastic. And most recently, as I say, I assigned her to this task force to research and advise on the stimulus package. So Kelly, thank you for doing all that. And let's start with, I know there's a lot of interest. We got a question coming in about this charitable deduction. That's going to have an impact. What are the details on that?
Yeah, so the CARES Act, is now officially law as of Friday when President Trump signed it. And it's a $2 trillion price tag, and there are a few key provisions in it that are most potentially impactful to nonprofits. And Steve mentioned, I think, the first one I'd love to talk about, which is some changes to the charitable deduction stipulations. And so what they're trying to do with this, there's two elements of it. One, and ultimately what they're trying to do is provide more incentives for individuals as well as corporations to make charitable contributions during this time where the lawmakers realize there's really a risk here for nonprofits. So if you remember from the 2017 Tax Cuts and Jobs Act, it roughly doubled the standard deductions for individuals as well as married couples. And what that did, the impact there was it dramatically reduced the number of individuals who could itemize their deductions. And thus it provided fewer incentives for making charitable donations if individuals could not itemize those donations. So now what the CARES Act has done is for those non-itemizers, it now allows them to deduct up to a total of $300 in cash giving for the 2020 tax year. So if you're still taking that standard $12,400 deduction as an individual and double that for married couples, you still can itemize up to $300 in charitable donations in deductions above that standard deduction now. $300 total, it's not a lot, but it can make a difference and hopefully encourage some donors, maybe at your annual giving level, to not pull back, that there is an incentive for continuing to make that donation. The other side piece of it is that for those taxpayers who do itemize, cash contributions now will not be subjected to any cap on adjusted gross income limitation. So again, the Tax Cuts and Jobs Act instilled a 60% cap on adjusted gross income on what you can deduct for your charity. The law now lifts that cap on annual giving from 60% all the way up to 100%. So these changes, actually in both cases, both that $300 deduction as well as this AGI removal of the cap, does not apply to contributions to donor advised funds. These have to be to 501c3 charities. And then on the corporate side, it increases the annual limit on corporate charitable deductions from 10% to 25% of taxable income, again, during this tax year of 2020. So again, just the bottom line there is they made these changes to hopefully spur charitable giving, to incentivize people to continue their giving. And so what you might think about as a fundraiser is, number one, how to use this information and communicate it to donors. If you have a spring appeal planned, coming up in the next month or two, think about how you might incorporate language about the $300 deduction for your major donors as you're having conversations with them and beginning to learn, what is their perspective on how this is impacting their giving. Have this information in your back pocket. You make sure they're aware of this change to the adjusted gross income cap.
Yeah, Kelly, that's a really good point. I think, it's up to us as relationship managers and fundraisers to be armed with all the information we can have. And what Kelly just gave and what is amply available out there is exactly what the changes have been for each donor class. It's really important because, we get we can get all kinds of excuses why donors don't want to participate, but this should be an encouragement. Kelly, let's go to the assistance that's going to be provided for nonprofits. I'm getting a lot of really good questions on this, so I know you're interested in this. Thank you for those questions. I'm actually a little surprised myself as I've been on the phone constantly just talking with everyone, every executive I can about how interesting and helpful I think this bill is going to be for the business model that you're running. Nonprofits employ a lot of folks, at $100,000 and less, and it's hitting directly at that group of payroll participants. And nonprofits absolutely participate. I should be clear about that. And so, Kelly, why don't you give us some of the ins and outs on small business loans?
Yeah, sure. So there are a number of other provisions in the CARES Act that might be applicable to your situation, different types of loans, different, tax deferments, things like that. But the one that's getting the most, I think, interest is what's called the Paycheck Protection Program. So the act has included just about $350 billion in forgivable loans for nonprofits and small businesses. And the main purpose really being to help organizations keep their employees on the payroll between now and the end of June 30th of this year. So these are federally backed loans of up to $10 million to eligible nonprofits and small businesses. And what does it mean to be eligible? Basically, you have to have under 500 employees. And the loans are meant to help cover costs such as payroll, rent, health benefits, insurance premiums, utilities, et cetera, really more of your overhead and payroll costs during the period of February 15th of this year through June 30th. So they backdated it to February 15th, assuming that's when certainly some businesses and nonprofits started to possibly feel the impact of the coronavirus. Just a couple particulars I wanted to point out. So the loan amounts are basically 2.5 times your monthly payroll expense for your full-time employees whose salaries are under $100,000. And so that will look very different depending on the size of your organization, but that can go up to 10 million. There's a 4% interest rate, and there's no payments or interest that starts to apply for at least 6 to 12 months. However, these loans can be forgiven if during the period of the loan, you demonstrate that you keep the same number of employees and payroll amount that you used to calculate your loan in the first place. If you keep that steady through the loan period through June 30th, 2020. And that you only use the funds you received for those allowable expenses. So payroll, utilities, rent, etc. So if you do that, if you don't make any changes there to your payroll and use the funds as they're meant to be used for, that effectively converts the loan into a general operating grant. You don't have to pay it back. It's completely forgiven. If you do need to make changes to payroll, there are stipulations in the text of the law around, if you go down by a certain amount, then you'll be forgiven this much less. So there are calculations involved there. We won't go into those today, but there are really very few requirements to obtain a loan. There's no collateral or personal guarantee provided because it's completely federally backed. And so it's also awarded on a first come, first served basis beginning either sometime later this week or next week. There's a lot that they're still unpacking, a lot of questions that are coming up that there might be some additional documentation sent out later this week on, how to handle certain things. But those are kind of the basics.
So, and Kelly, we should be clear that your first line of attack in terms of learning specifically about what this means for you, aside from all the stuff that we can make available to you, getting questions about, Kelly, can you provide all this material? And the answer is absolutely, we will do that. But I just want you to know that you want to go to your bank.
Yeah.
The government in this stimulus bill determined that the private sector, the banks, would actually be the lenders. So they are scrambling. I can tell you, I've been on with 2 or 3 banks, you know, in the details of it, and they're trying to figure out the program right now. But I've also heard that there are applications now that are available at some banks. They have to be SBA qualified banks, but most are. And so you want to go to your friendly banker and say, okay, show me the loan documentation on this. What does the application look like? Because that will begin to clarify for you if you know how it might apply to your business model. So that's a really important piece of advice for you. I think every organization out there that's on this call should look into receiving assistance. You don't have to take it, but you
Right.
definitely should look at that. Yeah, go ahead, Kelly.
Yeah, I would just say a couple other things. Yes, number one, definitely call your bank and see if they're a part of this. If they're not, you can go to the SBA website and see who their approved lenders are. The Secretary of the Treasury has baked into this, has also said he anticipates, you know, a lot of potential lenders want to become part of this program. So if your bank isn't part of it right now, they may apply to be. But a couple other things. You know, talk to your board or finance committee for their input on this as well. And if necessary, if this is something you want to go forward with, if you need their approval. You could also go ahead and start, you know, calculating your average total monthly payroll for those full-time employees over the last 12 months. So you have a sense of, as you're weighing all your different options, if you need to, you know, figure out how you're going to be paying for certain things, if you're anticipating a revenue drop, go ahead and do that calculation for this loan to see what kind of relief the maximum might be possible for you. And then lastly, you know, it's going to take a few weeks. Let's say you apply and you're accepted. It will take a few weeks for the money to actually reach you. So continue any efforts you have in place to manage and conserve cash right now. So.
And Kelly, there's a question about, do I have to go to my bank because I applied online? What's your answer to that one?
I mean, I'm not clear on, I'm assuming is the question, did you apply online through SBA? I'm not sure if they then connect you with the lender or if the first step is you have to go to a lender. I'm not sure about that.
My understanding is you can go to SBA and do it there, but only a specific types of loans.
Okay.
For the most part, it'd be done through the bank. I don't think you have to physically meet with them, particularly in these days. But I do think you probably want to talk to them because there's a lot of nuances. I mean, you know, we're looking at on behalf of a number of nonprofits and there are a lot of nuances. So, but you know, the best advice we can give you is go to your banker, ask for a loan application, or go online as is being suggested in this question, and just look at what it means and then do the calculation for your own business. It's pretty straightforward. But a lot of nuances, a lot of unanswered questions. So Kelly, can you advise on how we can deliver the multiple sources of information that we've uncovered?
Yeah, I mean, there's a lot of great organizations doing good work on this, parsing through all the different elements and details of this law. You know, I think we could create a page on our website where we can gather all those resources there. So it could be an easy way for you to click on different links. But, you know, Chronicle, I saw one today from Forbes magazine. I mean, there's a lot going out right now of different experts weighing in on this. The U.S. Chamber, their foundation has a page on this, and, you know, what sorts of resources and materials you should start to gather. Nobody knows yet exactly what you're going to need to submit with your application, but they do a good job of saying, you know, we think it's going to be this because this is what's required with other SBA loan programs. So those are a few I know in particular that have been really good, but we can also create something on our site to capture this. Okay.
I'm sure in the Q&A section, we'll come back to the whole stimulus area because it is obviously one of the hottest issues right now that we should all be looking at. But let me move right now to, and by the way, I see people are asking questions, but not using the Q&A format, which you have to do. Otherwise, we can't see your questions. Okay, so another key area for us to be thinking about as executives in this space is just the whole category around leadership. It's just frankly never been more important. I mean, I see it, I'm the CEO of this company and I am on the phone every day with all staff, you know, on a Zoom call. I've been encouraged to do that. And now I see by doing it how valuable it is just to talk. It doesn't always have to be about, you know, deal flow, partnerships, business. It can just be as silly as looking, you know, at what did your dog do today? And, you know, if a lot of our staff are sitting home alone, that's a very uncomfortable place to be day after day after day. And just, you know, coming together with colleagues, we have a very tight group, you know, within our company. We're all friends and partners and colleagues and such. And, you know, it's just a really important thing. So as a leader, you know, I try to emulate that and project that in many ways. So I want to go to, and by the way, I'll just say, I have in my lifetime actually never seen this kind of insecurity and panic, you know, among us. And it's just something where talking about it, being open, having friends, doing cocktails on Zoom, you know, whatever it is, really important because people just, you know, can't spend too much time in their own little setting by themselves or, you know, with a small number of people. So having said that, our expert in this whole category is Shabby Rosales. So let me introduce her. Shabby has been with the firm for 4 years. She heads our own HR group. And has done terrific things with it. She also, though, offers HR services on an outsourced basis. So you could actually take her on. She become your HR person as well. She's also launched a recruiting business for us. Makes a lot of sense, we've found, in the context of what we already know so well, relationship building. And so with that, Shabby, let me start by asking you, in this environment with, you know, how quickly we had to switch gears, you know, to suddenly being all virtual and all that. What in your mind, you know, are the highest level and special demands on our leaders right now within the context of nonprofits?
Sure, yeah. I mean, we're certainly facing unprecedented challenges as leaders in this crisis, things that we've never seen before, as you mentioned. It's funny, I feel like we often find ourselves trying to dream up new and unique ways to keep our staff motivated and focused under normal conditions. So now compare that to navigating through the uncertainty of what the future holds, while simultaneously trying to sustain a completely remote workforce. And we're suddenly faced with a level of complexity that not many of us are equipped for. So of the many ways in which we can elicit strong leadership through uncertain times, I have to say compassion, empathy, and maintaining a level head are of utmost importance. You know, there's just so much frenetic energy and anxiety around the current state of affairs. I think you hear us sort of repeating that over and over again, and it's the truth, whether it's through news articles or social media, or talking with friends and family, or just even completely unprovoked. We're all facing into something greater than ourselves at this moment, and your teams are looking to you, our teams are looking to us for some balance to this chaos. And so measured, steadfast, and calm reassurance is really what's most needed at this time.
So in the context of that, Shabby, how important is the tone, you know, that leaders in organizations set? And how do you, I mean, you're so good at that. How are you coaching me every day to, you know, be sensitive and say the right things and such?
Yeah, I mean, I think tone is really important. We have a moment now, and I was thinking about this actually, where this is probably going to be the greatest sort of team building exercise of our careers, right? Of our lifetime for many of us. And we've gone through a lot of these exercises in the past, as you mentioned, 9/11, the 2008 stock market crash, there are Hurricane Sandy for some people. I think there's a lot of situations that we find ourselves in where it's very easy for us to get caught up in the madness. And so as much as we can, try to be mindful that we have to stay the course, and we have to like keep everyone steady and hold down the fort. I think that'll take us through more than anything. Stronger teams will be formed as a part of this. Shared experiences make for strong teams. And so this is one of those situations where we will come out of this stronger. Every organization will come out of this stronger if they make sure that they maintain a steady and measured tone through this process, and not give in to some of the frenzy or the anxiety that comes along with it.
So being remote, as we all surely are, what have you found are sort of some tips to succeed, and how have we had to transition to that?
Yeah, I think in very short order, we've had to create a new normal for our team, as I'm sure everyone else has. It involves some things that we could have foreseen going into remote work, like the struggle of setting up a workspace in your home, or immediate childcare or family care needs, tech issues, et cetera. I mean, leaning into those things is as simple as offering patients, interim solutions and flexibility, probably more than anything else. But it also included some things that we didn't anticipate, or at least not to the levels that we've been experiencing them. I think first and foremost, and you mentioned this with so many of our workforce being alone in their homes, isolation is really a cause for concern here, especially for those staff that are alone or that don't have strong personal networks that they can turn to. So we've been able to combat this by increasing the communication amongst ourselves and our teams. We've moved to daily check-ins, group workouts over Zoom, virtual coffee breaks, lunch breaks, happy hours, hangouts, you name it. Basically anything that would have normally brought us together in person is still happening in the virtual world. Beyond that, heightened anxiety about what's happening can lead to a general loss of focus and productivity. And so the advice that we're following is something you've heard on this call already, and I'm sure you've heard elsewhere, and that's leaning in and over communicating wherever and whenever possible. So there's value in allowing folks to work through their agita together. And like I said, shared experiences make for stronger connections. And so we're encouraging, our own clients, our own teams to try to find opportunities where they can reinforce that.
So what are some specific things, for example, we're doing to ease or to enhance the employee morale piece and to, mental health elements to it? We have used a lot of technique. What do you recommend?
It's really nice, actually. I mean, it's interesting because in a time where physical health is sort of utmost importance, it's encouraging to see like equal weight on an emphasis on mental health as well. Some of those points I touched on, isolation, anxiety, et cetera, those are all facets of mental health and well-being. And so the things that we're considering, I think the first step is identifying and providing as many resources as possible to your teams. Many of your organizations probably already have things like an EAP or an employee assistance program. For those that don't, I would strongly encourage you to find a vendor right away. Your insurance broker is probably a good place to start. An EAP is a dedicated resource for your teams that allows them access to mental health professionals. So in addition to that, I'd suggest, any number of web-based resources or mobile apps that are focused on mental health, and we can share a list of those after this call. That might be helpful. A lot of them actually right now are offering discounts, and in addition to your EAP, you can also find some of those opportunities through your broker as well. Second, because we're facing so much uncertainty in timeline and transition, economic impact, I mean, there is so much uncertainty just surrounding us. The direct way to combat that, and what we're doing, is instilling a sense of control as much as you can. I would use this time to focus your team on the things that they can control and redirecting focus to as many productive channels as possible. I'm sure that there are things that your organization, that the things that exist in your organization that you've wanted to tackle for a long time. I know that we have them, certainly. It's things like internal process improvement, training and development programs, what have you. And these are things that serve to enhance your core culture. And culture work is part of the work that we do in the HR world, but it's also something that is crucial everywhere. The right culture, we often say, is intended to support, reinforce, and introduce beliefs and behaviors that build like a thriving and creative workplace. And so now is the time to put in the work to strengthen that culture and instill some of the values to get there. And lastly, while it's true that shared experiences, bring people closer together, and I will say, I'll call specifically on disaster fundraising, it really strengthens teams in the short term. Again, I think we've seen that after 9/11, after Sandy, Hurricane Sandy. There are a lot of others, tornadoes, the fires in California, et cetera. Like disaster fundraising, I think really strengthens teams. But if you look at and follow some of the trends in turnover and unemployment during those times, burnout and compassion fatigue are real. And history tells us time and time again that they're more prevalent following periods of high intensity and stress. So considering the emotional toll that our teams are facing, as much as this is a time to gear up and mobilize, there's also some value in allowing your teams to slow down and focus on what matters. And this can be a time where we take stock of practices and processes that can be sometimes considered busy work, or that don't truly add value. It's really a time, and we're doing a lot of this internally at Orr Group, but I would recommend this for everyone. It's really a time to reflect on what matters and what is worth like continuing to do. Sometimes less is more, and I think we're finding that right now.
Okay, the last area that we want to focus on as a category before opening up is fundraising in general, because we're all concerned about that. It's what we specialize in, and probably most of you do too. So just some things that I'm learning. I find it unusual sometimes when fundraisers, either executive directors, CDOs, or staff say, gosh, I don't think this is the right time, to reach out to my donors, and because they're going to think I'm fundraising from them and so forth and so on. And I have to say, I think this is the worst moment to hunker down. This is the moment to get on the phone and to just talk relational things, friendship things. How are you doing? How are you coping? And really listen. I've had hundreds of phone calls the last 2 or 3 weeks of that nature. And, I really do care about the people I'm talking to, and they get a sense of that. That's a good relationship building technique. And it also happens to be true, which is a nice thing. But, it's just so important for us to care about these folks and to continue the dialogue, to build the relationship. It's a moment. People want to talk. Just think of all of us sitting in our bunkers right now. We're willing to get on and listen to the screen, listen to us talk at you, but it's even better to talk with someone. So I think communication, reaching out, whether it's one-on-one or using digital techniques or whatever works for the target, that you're seeking, it's time to do it now. It's not time to sit on the sidelines. So CJ, let me ask you a question. I'll try to bring everyone into this conversation. Events. This is a huge issue. It's been something that we've had to deal with aggressively and in multiple ways because we've had to help move so many events. So can you comment first on just generally what have we been advising with events in terms of spring, fall, all of that issue, and then secondly, you've done a great job in helping organizations launch special funds that are related to the COVID emergency. So can you comment on that as well?
Yep. So the events were of top interest, especially as this started to take shape in the past few weeks with events that month, and then in April and May and June. Everything in that time frame has pretty much been canceled. And not only because that's what we would advise, but really what our states are asking us to do as well, our government. And it also comes down to even the smaller type cultivation events, everything in the spring should be moved. One way to kind of combat this is, well, there's a few. One is to reschedule for the fall or the summer, preferably the fall, but use that time, this extra 6 months, to fundraise and keep reaching out to people and trying to raise more money in this extra time that you had. And then any of the people who did already donate to your event in the spring, ask them just to push that forward to the event in the fall. For those that do need to cancel, we've seen a bunch, and I'm sure you've seen them on emails, a lot of organizations doing them virtually. Paul Tudor Jones got on CNBC the other day with Robinhood. They're taking over the Javits Center. The Javits Center is now a hospital. So they're doing it all virtually, and he got very emotional about it as this, it's kind of a time and a moment as human beings where we all need to come together. And he was saying he is going to use that event or the virtual event as an opportunity to do that. So we're seeing a lot of that happen. The other part, Steve, you asked about was the fund. American Red Cross and a lot of the other organizations like that who do emergency fundraising usually do emergency fundraising because they're providing help to the emergency. Like there's a hurricane or something, American Red Cross will send people down there. So what's interesting about COVID is every single organization, every single person across this globe, nation, is affected by the virus. So everyone's mission will be affected. So a lot of organizations are establishing funds to help those individuals who are affected that are immediately in their mission sphere. We found that if people are giving right now during this crazy time, it's most likely going to be something that is an emergency fund or something that goes to deal with your mission and how your mission is fighting the COVID impact and just the global impact. So we've had a lot of success with that so far. I know that probably maybe a quarter of our projects or assignments are working on this right now. And so far it's been working well, especially as this is growing and becoming a longer term thing. People are definitely gravitating to it more.
So Kelly, let me go to you on, general comments on major gift activity that, and capital campaigns. What are you seeing and what are you advising?
Yeah, I'll reiterate, I think what we've said a few times now, that now is the time to be communicating with your donors. If you're a major gift officer or anyone who's a relationship manager with a donor in your organization, now is the time to be reaching out to everybody one-to-one via phone. I've been hearing from a number of organizations that we work with who are doing this, that they're getting a hold of donors that they've been trying to reach for like 2 years, and they're finally picking up the phone. I mean, so this is a moment in time to really, I think, get an opportunity from. The other thing, in terms of capital campaigns, our colleague Craig Shelley put up a blog post about this on our website, so I'll paraphrase a bit from that. But he made a really good point that capital campaigns are long for a few reasons, and one of them is that it allows you to weather potential storms like this, right? Campaigns are usually 3 to 5, sometimes longer years, and if in that time frame, that allows you some flexibility to manage through something like this. So, but if you are about to launch the campaign, you might consider delaying the launch. If you have already made asks, and this doesn't relate just to campaigns, but to major donors in general, if you've made asks and you're waiting to hear their response, proactively check in with them and say, look, the original timeline we talked about for a decision, don't worry about that. How are you doing? How's your family, et cetera. For those who are already paying off pledges, again, start with an outreach about them personally and their well-being, and recognizing that circumstances may have changed, but also be sure to reiterate that the needs and priorities of your organization and your mission have not changed. And so, we're recommending that you should have a very sort of transparent, tactical conversation with donors about their pledge payment schedule. And, don't assume on your donors' behalf that they're not going to be able to make their pledge payment. So number one, get clarity from them, what their situation is. And before you make those calls, understand on your end, your willingness or your ability to adjust payment schedule. So that's important to know going into those conversations. What sort of flexibility do you have as an organization to be flexible with your donors?
Okay, thank you. There's a bunch more we could cover on fundraising. We have about 10 minutes and I'm getting some terrific questions. So let me keep sending them and I will try to get through them all. Here's a really good one for you, Shabby. How are you suggesting that team members juggle a quote, work from home scenario, given the childcare issues and the homeschooling and, everything that everyone's expected to do at home and simultaneously. So do you have some wisdom there?
Sure. I mean, it feels impossible, right, to have to do it all. And we're suddenly, teachers and chefs and all these things all at once while still having to maintain our day jobs. I think that the best advice that I've found and that I've shared with others is to establish and maintain a routine for yourself and for your family, and making sure that you stick to that day in, day out. Because what helps with a routine is that it helps establish control, it lessens anxiety, et cetera. But it also helps with being able to plan through some of the periods where you're going to have to be super busy, plan through some of the time when you're going to have a little bit more downtime and a little bit more availability to be present. And as much as you can, rely on some of the resources that are available online or within your own networks. We've made use, in my own family, we've made use a lot with the online FaceTime and gaming that we can do with our nieces and with my parents, et cetera, just to keep everyone connected and able to stay connected. So I would definitely recommend keeping a routine and leaning heavily on resources that are available online. And we can share some of those after the call.
I'm going to ask another one here in 2 seconds, but I do want, before, in case anyone has to go, we are going to put up our contact information at the end of this. So, and we encourage you to contact us. I mean, that's why we're doing this, because we believe that communication is the key. But you can also obviously go on the orrgroup.com website, and our emails and contact information is there as well. We would like to talk to you. But there's a whole series of questions about, is it only appropriate and effective right now to ask for COVID-related, support, or what happens with donors is a specific question for asks that are not related to COVID. Does it work? Is this the time to do it? Should we wait? Kelly, you're nodding, so I'll pick on you.
Okay. I mean, I think it probably makes sense to wait 3 to 6 weeks right now before making any, non-COVID related asks, because we still don't know, as we were saying earlier with CJ, that we don't know yet exactly how this is going to play out. There were little bits of maybe hope today in some cities and regions that the curve might be starting to flatten, but again, it's too soon to know if that's a real thing. So I think we have to just sort of pause on asks for the most part for the next few weeks. But in the meantime, look at all of your donor plans, right? And reassess if you were going to make an ask on April 30th. Okay, if that's not reasonable, when do you think you might make that ask? And then ultimately, add all that up and figure out, okay, what's the reality of what potential revenue will still come in if you're on a June 30 fiscal? What does that look like for the rest of, to be able to close this fiscal year? If you're in a calendar fiscal, you have a little more flexibility. And, hopefully that, after the second quarter, as things will start to calm down. We don't know yet, of course. So I would just say, wait a little bit, a few weeks, maybe see where you stand. But again, those conversations right now that, are cultivation conversations, you're going to learn a lot from your donors as to what they're thinking about, how they're doing, and their personal ability to make contributions and their interest in making contributions. I work with an organization who it's a medical research organization, and they serve a population who has reduced immunity, and so they are an at-risk population. They're not connected to COVID directly, except that they're an at-risk population because of COVID, and they're using messaging around, if anything, this is just telling us how more than ever a cure is necessary for this disease. So they're still out there making asks because of that. So again, it's going to be unique to whatever your situation and your mission is, but pausing for a little bit, but then reassessing along the way.
Kelly, a couple specific examples. I'll have to leave the names out, but we're working a good side. We are working with a large university, and I was on a development committee call. We're running a very large campaign for them, and of course we have paused for a moment. But the whole campaign committee was on, about 20 people last week in the midst of all this. And, the question came up exactly the same way. Is this the time to ask? Should we be communicating? Should we go into a hole for a while? And through the course of the conversation, I was recommending the things that we're all talking about now, which is, maybe this is the time to, really go out and be aggressively communicating. So by the end, or through the course of that call, and by the end, it became a huge team effort, realizing that, well, yeah, we know a ton of alums, and we're family, and this is a community, and we want to project that, and we want to be part of that, and we want to enable others to be part of that. And then, so they got all excited, and sure, this is not the time to ask for funds, but they are looking at an annual fund that ends at by June for them, the end of their fiscal year. So they have to re-engage, but not now, as Kelly's saying. I agree with what you're saying. But by the time, if you start the conversations and they're not fundraising directed right this second, by the time we get into hopefully, May, And then June, you can go full blast at the fundraising, but you will have set it up through lots of communications, well prior to that. And then another example, working at a big hospital on a capital campaign, but we went and I met with a CEO and said, gosh, you're right in the firestorm. You're providing tremendous services for the community. You are it. You are the ones that the whole community is going to look to if they end up personally with an issue. And that kind of was a light bulb went out, and they started sending out communications around that and got tremendous impact. Today, actually, I saw that one of the large companies in the region on their own said, we're 100% supportive of this hospital. Follow us. We're making a big contribution. That's the kind of emotion that's out there, with a COVID-related issue that I'm sensing. So those are kind of cool examples. Right.
Steve, I saw one question about how to treat planned giving right now.
Thank you.
And so a couple of thoughts there. One is I would not stop any of your planned giving marketing mailings. You'll want to probably adjust the messaging a bit, acknowledging what's happening in the world right now. But those marketing mailings, I think, still make a lot of sense. In terms of, talking to donors about specifically making a commitment of a planned gift, again, I think it's more about listening and learning where their head is at, and perhaps now is not the exact right moment, but you might need to delay a bit. The other thing, and I don't mean this to sound opportunistic in any way, but something like this that involves our health, right? More people may be thinking about their own mortality, and are they prepared for that? We find over and over in planned giving work, people you would have thought would have had their estate plans all worked out actually don't. And so more people might be thinking about, Matt, I need to get that part of my life together. And so in time, those people might be good prospects to talk about planned gifts with. So again, I would say don't slow down on the communication with planned giving prospects, just as the way you wouldn't with major donors or other annual donors.
And one note on planned giving, post 2008, as you all recall, donors, philanthropists became very shy about releasing cash because for obvious reasons, just uncertain, what their IRA was going to look like, and, all the vehicles that they use to collect wealth for retirement type things. What happened during, as a result of that, the last decade, planned giving has been an enormously valuable and popular issue. Whether you're building endowments or not, planned gifts are very important. So I predict that in the wake of this crisis, planned giving will continue, but even in a more aggressive way, be valuable. So if you have not learned the skills of asking for a blended gift in the context of either a major gift ask or a campaign ask, please call one of us and learn how to do that, because it's very, very effective. My colleagues can see all the questions up here, so we've only got 2 minutes. Anything anybody wants to tackle? So Kelly, I'll pick one for you. You mentioned that a 501c3 can get assistance because it is a small business. Does that also hold true for 501c6?
No, it's 501c3s only. Yeah. I did see another question asking about if the work of your organization takes place overseas, right, does that disqualify you? No, that does not. But the Paycheck Protection Act only applies to employees that live in the U.S. though. So your work can take place overseas. That's fine. But if you have employees overseas, you wouldn't be able to count them as part of your payroll calculation. But it's any U.S. based employees that would be counted there.
And of course, you need to be a domestic 501c3.
Yes.
Correct?
Yes. Exactly.
No, that's really good. That's valuable. All right.
We may want to put some of these together in like an FAQ that we send out after the call, because there are a lot of really good questions.
Okay, terrific. Katie, can you flash up our contact info? Let me just close by saying thank you so much. As a CEO, I'm trying to live exactly what we are talking about here by, being transparent, overly communicating, being in touch with staff, talking about their families, talking with clients and partners, in human terms, as well as, strategic terms, because everybody's wondering the same thing. What do we do next? And, when's this thing going to break, and so forth and so on. So that is what I encourage you to do at this moment. So thank you for being involved. And we intend now to move into perhaps a series of webinars that go deep on a specific topic. This has been an attempt at glancing over several topics, just to cover the landscape and to demonstrate the power of our leadership, which I think is pretty powerful. And I thank you guys for joining. So there you go. It's 3 o'clock and we're done. Thank you so much. Have a good day.
Thank you, everybody.
Thank you.